Good evening. Ira Epstein of Linn & Associates with your metal market wrap-up, and this is for Wednesday evening, the 2nd of December, 2020, 6:30 p.m. Central Time. I'm a little late. I did my currency special video report today. So if you go to our website, www.iraepstein.com, under the word research at the top, the report is there. It's a video report. A lot of effort went into it, and it deals with the euro currency. So pretty interesting stuff, I think. And if you'll notice, I'm starting to roll these reports out. Tomorrow, I'll set my date for next week's live webinar again. So these are going to start popping up more and more often as well. So let's talk about where we're at. As you can see, the gold's back into the 1830s, didn't stay under 1800 very long, and the silver market certainly has come back sharply from being under $22 an ounce to $24 plus right now. Copper, as I said, the 350 level offering some resistance just because it's an even number, probably nothing more than that. In the foreign currency market, I think the market is waiting to see what the U.S. does or doesn't do first with the relief bill, and from what I'm seeing, I'm not excited about the prospects. I'm not seeing that Mitch McConnell is making effort to go up to $900 billion. It's not his fault. Maybe the Republican senators don't want to do it. President Trump, from the news reports, he's still at that $500 bill. Can it all change? Has it changed? I don't know. We'll see. We'll see how bad things get. What I can tell you is the headlines are getting worse and worse about COVID-19. Now you're starting to see everywhere these hospitals filling up, and capacity rates are crippling. They're falling. Hospitals working 14-hour, 15-hour shifts. I know some. It is just misery for these people. And how effective can they be day after day working those hours? I don't think real effective. You can do it for a while, but it will wear on you after that. As we look at gold on a weekly chart, we are for the week up $47. I know it doesn't feel like it, but that's a nice recovery. But that's all it is a bounce in a market that went from 1951.70 to last week's low closing price of 1981.90, and we've had a bounce. Okay. And as you can see, the bounce on a closing basis, $47. Fine. I still see resistance at 1908.30, and I am not saying it's going up there. I'm also not saying it's not going up there. Let's go to the chart action to see what the chart action is saying. As you can see, we had this big drop, a washout drop, I like to call it, and now the market's getting a bounce back in there. In the bounce, we got up high enough on today to take out a previous, if you will, lower highs, the peak of a lower area there. So that now gives you a lower low and a higher high. You've broken this downtrend leg that really began up here. If you were going to measure this and I were in a classroom with you, that would be the high, that would be the low, 50% probably, you take half of that and you get to see where you're at. That'd be $220, $110 you add to that. So that'd be $1870. It'd come in right about here. Fast math, but simple. Work with your kids. In the Feb gold moving averages, again, I don't like, and I tell this in my subscription videos, the paid ones, I'm always leery of the first move under major moving averages getting aggressive to go with it. It generally doesn't work. The word is generally. Not that it always doesn't. Now you're getting the bounce. That changes it. Now if I wanted to get back under it and stay there, I wouldn't argue with it. I'm also noticing that we're getting this bending of the 18-day average. It might get to that 200, something that the bears are going to be looking at. They want that to occur to drive prices lower. The bulls want to stop that by getting up to that number and, if you will, gradually turning it before that occurs. When we look at Bollinger Bands, the market had been running the lower Bollinger Band, and it's now over with that scenario. And at the same time, when it lost its embedded reading, and I'll come to it right here because this is so important, you lost it right here on Tuesday. This was December 1st. Well, how long ago was that? One day. Okay. It sounds so far ago. But when that was lost, if you don't get it back right away, What do the odds favor? The odds favor the market makes a run to the closest moving average. Now, before I go any further here, if we take a look, this was a 200-day moving average. You see that? Now I'm going to come back. I just didn't put it on this chart. So many lines sometimes is too much. And that would be under the market here. And as we can see together, now I'll show it to you. You're over that. And I think that could be the number you make your run to. But the first number is all it owed, the 200-day average, the way that I teach that technique when you lose the embedded reading. Getting up there is not a bullish sign. It's just a sign that the market, it's like a snapback. You pulled it pretty hard, it's snapping back, and that line in the sand, that neutral zone, is all I'm looking for at this point. As for the gold-silver ratio, it's just stuck here. Gets a little over, gets a little under, it's gone nowhere. But I still favor silver in the longer pull because the chart looks better. Yes, you have a lower low, higher high, and you can see when you got up to this number, you were oversold, not embedded. But when you corrected that, where did you go to? Again, that line in the sand. Markets like neutral spots. When you look at some of these algorithm traders, in other words, these funds that run that, they'll put in different things from all the traders, their trade ideas. And from there, they come up with things. And I've noticed over the many years that I've watched it, how that's just your neutral spot. Now, let's assume it rallies from here. The next resistance is going to be 25.16 to 25.41. If it breaks down, support's back at 22.73. The biggest question is 21.96. Was that it? That's the big question I'm asking myself. As for copper, I like this action. I like that the market got back under the lower Bollinger Band and it's staying there. It's still riding that band. Today would be the first day it didn't hit it if that occurred since way back here. This is still very bullish action. I think the pros are buyers on these pullbacks, looking for that to continue. And we really haven't had much of a break to even get long if you think about it in the chart. In the platinum, as I said, I think you got up today, hit the upper Bollinger Band. If you go back to yesterday, the high yesterday was 10.08. The Bollinger top was 10.0570. That was actually the first time it hit it. Today you hit it, but you're not closing over it, as you can see. It's still very bullish action. Support down on the breaks under here because you have an embedded reading. Until that's lost, I expect the market, as long as you don't take out a previous day's high, that when you get a dip in the market, it's going to be bought by the pros. Palladium market can't get away from this 18-day average of closes. Right through here. And it just is amazing to me. It doesn't want to break out one way or the other. So what? Leave it alone. You don't have to do anything with it. It is overbought. I wouldn't touch it. And in the dollar index, well, the dollar index now has 2 session closes under the lower Bollinger Band. It's got the embedded reading, which means I'm definitely in the bear camp. But do you go short under a Bollinger Band? If you're a regular viewer of mine, you know I'm going to say, no, you don't do that. So where are we on everything? Well, part of what the dollar is doing, I'm covering in my special report on the euro currency. I'm giving you in this report the monthly charts, the weekly, then I'm going to take you to the seasonal charts. I'm going to take you to what we call our price counts, and you're going to be shocked at some of the numbers that the price count is calling for in this currency, and then the daily charts as to how you get in and out. So I'm covering the euro in this particular report. Probably next week I'll do another one. As you know, I give this report free a few times to initial viewers, and then after that, if you become a subscriber, it stays free. Otherwise, you're paying for them. Why? It's 20 minutes long, the video. I really cover a lot of detail. I'm not writing a quick report to get published in a little journal and it's this long. I'm really covering a lot of detail. Want to see it? Go to our website. When it's there, look under research. You will see euro currency with today's date. It only stays up 3 business days. So you want to take a look at it starting now. I'm Ira. Have a great day. See you tomorrow.